the Fed is going to pick inflation is because that happens later. And of course, as we've seen, they can come up with a scapegoat to blame inflation on somebody else. They never accept responsibility for the inflation they create. People still don't understand the disaster that the Federal Reserve has created with this policy. You know, I was very much against QE from the beginning, and people are about to find out why. The Paul Krugmans of the world and all the people on mainstream investment firms who were blindsided by the 2008 financial crisis, who laughed at me on national television when I was warning about that crisis, these are the same people who are oblivious again because they think the Fed solved the problem they didn't understand. I understood the problem. That's why I knew the crisis was coming. And I also knew that the Fed made the problem they created worse. I just didn't know how long it would take before we experienced the consequences. Well, now we're here, right? We've met the can that we kicked down the road, and there's no place left to kick it. But people have no idea how bad this is going to be because we've had over a decade of unprecedented monetary madness and an unprecedented level of malinvestments, misallocation of resources. All these mistakes have been made that have to be corrected. And the fact that we didn't correct them a decade ago means they got much bigger, but it doesn't mean that we could, avoid the day of reckoning forever. We've got a date with destiny, and, it's soon. And what I started to observe was the divergence in the markets, looking at what happened in the precious metals market, looking at the big outperformance in silver. And today we had almost 9% move up in silver in one day. I mentioned the outperformance last month in silver over gold. To me, looking like, okay, this is indicative of a turning point that you now see silver, which had been leading gold down, now leading gold up. And in a bull market in precious metals, silver outperforms gold. And the fact that it's outperforming now is a sign that we may be in a bull market. In fact, silver is now up 18% since its low last month. So that's almost a bull market. What is in a bull market by that 20% definition is gold and silver mining stocks. The GDXJ made a 2.5-year low a week ago today. A week later, it's 20% higher. In 1 week, we moved up 20% from that low. And I saw this action. I've been commenting on it the last couple of podcasts. Also, the topping action in the US dollar. We had that one spectacular day where we had outside reversal days in the dollar, in the gold market, in the gold and silver mining stocks, and in the bonds. And I thought the outside day in the bonds was pivotal in that it would put in a short-term top. And so far, it looks like it has. I just don't think it's going to be a long-term top. I think that's just, created a bear market rally in bonds. But for the dollar, I think it probably is a top. And now we're in a new bear market in the dollar and a new bull market in gold and silver mining stocks. So I think this is the turning point. Has the Fed officially capitulated yet? No. Have they pivoted? No. But I think the markets are starting to sense that this is imminent. And I think a lot of people said, hey, I don't want to buy any gold. I don't want to buy these gold mining stocks until after the Fed pivots. And I've always said it'll be too late. I mean, it won't be too late, but it won't be nearly as opportune as buying before the pivot, because you got to take a little bit of a risk, right? No guts, no glory. The market is going to start to price in the pivot before the pivot happens. So if you wait for the official pivot, you could miss a huge move off the lows. Gold stocks could double or triple before we finally get the pivot. Now, I don't think it's going to be a buy the rumor, sell the fact, where the people who bought, when they finally get a pivot, well, then that's the top. No, I think that's just going to send the market into another leg up, because people have no idea what this pivot means. Because inflation is going to get worse and worse and worse during this recession. And you have a lot of people who think that recession cures inflation, that if people lose their jobs, well, that helps fight inflation. In fact, people are actually saying that the goal of the Fed is to put people out of work to reduce inflation. That is nonsense. People working doesn't cause inflation. Economic prosperity doesn't cause inflation. You don't have to make the country poorer to get rid of inflation. You have to make the government smaller. The government is the source of inflation. And if anything, a vibrant economy with lots of people working helps fight off inflation, or at least minimize its impact, because we produce more stuff. We need more people working. We need more supply. That keeps prices down. And so if the government just forces a recession and forces people out of work, that's going to make it worse. We're going to keep printing money. In fact, what happens in a recession? The government spends more money. The deficits go up. More bailout money, more unemployment. So a recession and high unemployment is actually going to make a bad inflation problem worse. And the markets just don't understand that. That's why the 30-year bond is still yielding, 3.6, 3.7%. People don't realize that inflation is more likely to be 10 or 15% or 20% for the next 30 years. The people who are buying these U.S. Treasuries are going to get wiped out. They're not going to get even close to compensated for their loss with a 3.7% yield. You see, there's only two things that could possibly happen to holders of U.S. Treasuries. The government defaults and doesn't pay you, or the government wipes you out with inflation, and so the debt is repudiated through inflation. Those are the only two options. Option A is not very likely because the government doesn't have the integrity for an honest default, so they're going to go with option B. They're going to repudiate their obligations through inflation. And when the markets figure this out, the bonds are going to get killed. Because I'm getting a lot of emails and people are asking me a lot of questions. Look, is it possible that this is a head fake? Could the Fed come out tomorrow and throw cold water on the idea that they're thinking about not hiking, or that the next hike is the last hike? They could. They can try that. They can say, no, we don't care if we have a Lehman Brothers bankrupt. We don't care how many banks go under. We don't care if we go to depression. As long as inflation is still above 2%, we're going to keep on fighting it. Yeah, they can do that. Now, will they do it when push comes to shove? No, of course they won't do it. But, they want to keep on talking about it. I don't think so. I think once the markets really start to lead the Fed in a particular direction, I think that's where the Fed is going to go. I think the Fed likes to follow the markets. The elections are coming up. The midterms are coming up in November. We're getting close to November. So they don't want the market imploding. I don't think the Fed is going to try to walk this back. I think the Fed might be happy that this is happening. In fact, I pointed out on my podcast, several FOMC members started to backtrack. They started saying, maybe we've gone a little bit too fast, a little bit too far. Of course, they haven't gone far enough. They were too slow. That's the problem. And remember, the problem isn't the rate hikes. That's not the problem. The problem is all the rate cuts in the past, and not just since COVID, all the way back to 2002. The Fed has maintained this policy of artificially low interest rates for 20 years. That is the problem. Raising interest rates now just exposes the problem. And now that the problem is being exposed, people want to shove it back under the rug. Well, it's not going to work. So my point of this is forget about it. Even if the markets go against us again,